Hey everyone, let me explain to you my shorting strategy in crypto. So it's called the parabolic short, which is similar to the strategy I shared in my story, right? So here's the basics of what parabolic shorting is. So the idea here is that you have to look for a coin, or perhaps if you're trading stocks, a company that displays or exhibits a price action of extreme optimism. So, what do I mean by extreme optimism? Preferably, the faster it takes for price to increase by 100%, the higher the probability that people will start taking profits. And that's the time where you enter a parabolic short trade, right? So here's a very good example of a recent trade that I took where I had a massive conviction in shorting this coin because it had 100% plus move in a matter of 2 days. Okay. So actually on the first day I was already looking to short the coin, as you can see here in the hourly time frame. So I tried shorting it over here, right? And the logic behind this is I didn't want to be the first person shorting. Why? Because, for example, if I shorted here, I would have gotten stopped out immediately when the price reversed, right? So I need to wait for more confirmation before I enter the trade. Here's a good example, right? I shorted here, but the problem was I got stopped out, which means that I may have been too early shorting the coin. But then this didn't stop me from monitoring the coin because, I mean, as far as logic is concerned, I know that it would eventually have a situation where massive sell offs would occur. So during this time, when the price was consolidating or forming a base where, well, in simple terms, there is an equilibrium between supply and demand, since the price is just staying within this area, right? It was kind of hard to tell also whether the price would go up or down since it's in that equilibrium phase. But regardless, I placed a short position here, right? Because when you look at the volume characteristics, there's not as much buying compared to selling volume. And there's a larger volume towards selling, which means that the selling pressure here is accumulating, right, over a certain number of hours here, right? So I place my stop loss here and my entry is at this candle. So I was quite early also in this entry, but good thing I wasn't stopped out, right? As I placed my stop relatively wide, right? I didn't place my stop here because it's way too tight. I would have gotten stopped out in this candle, but thankfully the price eventually went into my favor, right? I was able to position myself quite largely in this trade, and this is the benefit of using the parabolic short strategy, especially with a very, well, not a very tight, but like a relatively tight stop loss, right? Because it allows you to have a larger position size while keeping the risk small. And this results in asymmetrical returns. Okay. So I did not just short the coin twice. I shorted it 4 times actually. So after this good trade over here, I was looking into shorting it again. Why? Because during this time, you can see that there was a sudden pump, right? And this was a result of people who had short positions getting stopped out, perhaps because someone, a whale perhaps, was buying a lot of um, TAE coins, right? And the short traders had no choice but to cover their shorts, because then um, they would have lost a lot of money during this time, right? So my thinking here was that perhaps it's just like a pump, sudden pump and dump again, right? Which is why during this consolidation, similar to what happened here, I positioned myself with quite a large position, risking 2% of my portfolio. However, the pump didn't stop here. So shorts were taken out here again. I was included in that, but good thing I was able to set my stop loss here immediately. So I did not suffer. Like imagine how much losses I would have suffered if I didn't set a stop loss. So this is the importance of risk management, right? So the coin continued to make 100% plus move again. Right? When we look at the we can look at the 1 hour time frame. So it came from $0.11 to $0.38, right? So again, the same logic applies here. A sudden pump in the coin, which led to a triple digit move, is bound to fall once people start taking profits, as they are already satisfied with the gains they made in a very short period of time. So what I did, same logic, right? Wait for confirmation. I used the 5 minute time frame since I can explain like the different types of time frames you can enter in another video. But essentially here, I entered in the 5 minute time frame once I saw this massive red candle as people were taking profits, right? When it broke through that, that's when I entered, and I was already covering my position here, selling one half, and then covered the rest here, right? Because this candle was a big red flag to me, because I thought that people were trying to buy up here again, and it broke through the moving averages, which is what forced me to cover all of my position. I was also positioned largely in this trade because, again, I understand the logic of how price action works, and by having a better understanding in how to do these things, that's the time where you can have high conviction. And if like you've witnessed this hundreds of times as you study historical chart patterns, then that's how conviction is developed. So yeah, that's all for this video. Thank you guys for watching, and see you in the following videos. Bye bye.